Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for coming on today.
Good afternoon.
Well, let's start with stocks on Wall Street. At about noon on Tuesday, U.S. time, we're going to get U.S. consumer price data, and that's widely expected to show inflation still running pretty hot. Ahead of that, stocks on Monday were mixed, but mostly higher. The S&P and the Dow breaking their losing streak, but the Nasdaq down again. What's the story in the global markets?
Yes, if you look at the U.S. market, it continues to show some correction. It's been doing that for the last about a week or so. Last week, most of the indices were down by somewhere between 1.6 to 2.5%. And main reason for that is because of this inflationary pressure that people are worried about. The PPI number, production price number came out, and that went up by 8.3% year on year. That caused the concern about the overall operating profit margin to go down in the future. And if not, then inflation numbers will be coming in at much hotter than expected. And already it's been showing about 5.2% year-on-year growth rate before. Now they're saying that the number should remain that high. It might not go down much further from what has been the very high number. So all in all, that is quite a negative news in the sense that the Fed will be accelerating its tapering, and also if that's the case, then people are concerned about the rate hike that might be coming in faster than expected. The previous cycle, 2 years later after tapering started, rate hike started, but for this time around, people might be thinking that it will be less than a year later after the tapering started. On top of that, there's a concern about the U.S. President Joe Biden $3.5 trillion budget package might cause the corporate tax rate hike from 21% from 26.5%. If that happens, then it is a bigger risk for the high profitable companies, given the fact that a lot of these so-called FANG or MAGA companies are actually paying much less taxes on the basis of internationally operating. So that might cause some of the additional taxes for some of the major companies, and that is causing the concern, and therefore the Nasdaq was actually the only index that was down yesterday. All in all, I think that we need some breathing time for the next month or so because the U.S. market has risen from the beginning of this year to now by around 20% plus, and that seems to be too much ahead of the earnings cycle for the time being.
Well, switching gears for a second to oil, prices have rebounded over the past few weeks back to above $70 a barrel. Still some risks, though. Interestingly, Bank of America is one of those talking about $100 a barrel if there's a big freeze this winter again in the U.S. like we saw this past winter. What do you see happening with oil prices?
Right. As I said, the PPI numbers are rising for U.S., and it seems to be happening for everywhere else. And one part of that, obviously, is the oil price. And oil price now has reached above $70 per barrel again, once again. Now, of course, the short-term reason for that is because of this, the impact of the Hurricane Ida. That might cause the U.S. supply to be much weaker than expected. And maybe the demand is picking up with the COVID-19 issues dying out, with the vaccinations increasing to as high as 66% for U.S. All that resulting into demand and supply picture obviously pushing up the prices further. Yes, that might be the case for the short term. However, though, if you really think about the long-term perspective, we are moving away from oil to the renewable energies, and the overall changes are happening all over the world, and also changing gears to electric car from the overall the gasoline cars is actually happening much faster than previously anticipated. All being said, the demand and supply picture might be quite well positioned where the price might not be falling or rising that much. We've been saying that the oil prices should remain at a trading range somewhere between $65 to $75 range. We've been saying that, and that's because of the economy recovering in nice pace. At the same time, there's a structural changes happening in the energy segment.
And today in the Korean markets, it looks like retail investors taking some profits, but foreigners and institutions buying pretty heavily. Both the Kospi and the Nasdaq with a nice bounce back of around 1%. Tell us about the domestic market.
Right. A lot of people have been, concerned about the market right before the holidays, the Chuseok holidays. And that's from Monday to Wednesday of next week. And as you know, the FOMC meetings are set at the 21st, which is right after the vacation period of Korea. So I guess most of the Korean retail investors are cautious and that they're selling the index or selling the stocks before the vacation or holidays, and that is resulting into the net selling of the retail investors. However, though, if you look at the fundamentals of Korea, it seems to be doing very well on the basis of the export numbers as well as the overall economic growth numbers and the earnings growth rate of Korean companies. All is indicating that the Korean equity market is cheap relative to anywhere else in the world. So therefore, foreign investors are actually buying into this opportunity of the retail investors selling into the market. And institutional investors are doing exactly the same. So as of today, net selling by retail investors by almost 1 trillion won plus, whereas the foreign investors net bought about 300 billion won worth of it. Of Kospi, and also institutional investors were heavy buyer of about 760 billion overall. We think that the picture should be where right after the holiday seasons, we think that the Korean equity market is quite a good position to go up in the future.
And finally, Mr. Yu, Korea's export prices were up last month for an ninth month in a row. According to the BOK, an increase of 1% in August from the month before. Not an increase across the board, though. Certain metals and refined and chemicals were up, but refined oil products and farm produce were lower. What do you see happening with Korea's exports?
Well, if you look at the overall export prices as a whole, it has risen most since 2009. Korea's export prices jumped 18.6% year-on-year in August of 2021, accelerating from the previous month of 17.4%. Clearly, so overall big picture is showing that the export prices are rising. As we've been saying that the production prices are rising globally, and the demand from the U.S. is picking up. Overall economic growth rate of global scale is actually picking up as well, and that resulting into overall prices rise. Yes, but though, as you said, of course, it really depends on which kind of product. And if you look at the so-called coal segment and petrochemical side and also the agricultural products, obviously that price is down because of the demand is obviously changing. As you know, the agricultural prices were down quite heavily in the last a few months. And also we've been saying that the coal is moving away from coal and then going into the new energies or renewable energies, and obviously the demand is changing. So that clearly indicates and shows what's happening to the global economy, and structure is changing in terms of the demand for products. We think that this kind of trend should continue with the retail investors or the retail individual consumers are showing a fairly good growth in the salaries and wages, and that results into strong demand for the consumer goods. And obviously, if that's the case, then a lot of the export prices related to Korean export prices should be showing continued strong numbers in the future, despite that it's been risen by quite biggest of 18.6% year-on-year in August.
All right, Mr. Yu, we'll have to leave it there for today. Thanks so much, as always, for sharing your insights with us. We appreciate it.
Thank you very much.